A train wrapped to spin fire. The NFT analyzer, diving deep into projects. He's the crypto energizer. From remain coins to tokens, he's got all the intel. Web3 is a tree, show you where to excel. He's got the insights like a digital magician, unveiling secrets of the blockchain with precision. While stories from the web, he's always...
All right, good morning, guys. Mega GMs, welcome to the Swarm Report. I love that you scooted right back there in time, man. Hey, we're joined today by, it's the boys here from Quant.Fun. The really cool project and really interesting project. We were talking about them, I think it was last Friday. Was your Genesis launch on Friday?
Yeah, we launched Thursday.
Thursday. Okay, cool. Yeah, I remember it kind of, I don't know, for me at least, popped up on the Genesis board. And we noticed it, I think, during a show, and we stopped and watched the like little 2-minute explainer video that you had there, which is awesome. I'm really glad you did that. More projects need to do that. And I think they're starting to, but it's sounding interesting, especially since people here are kind of getting like accustomed to the idea of a hedge fund and AI and how it plays into that. You know, one of the first ACP clusters to go live, we happen to be in it. But again, excited to dive into your project with you guys here. Do you guys want to do a quick introduction? And I want to say too, like, I'm going to not mix up the formula of the show because we don't have one, but I do want to show you guys some quick headlines out there because there's some kind of spicy stuff going on in the virtuals ecosystem. So maybe some quick intros, and I'm going to hit those headlines, and then we'll dive into Quant.Fun. Whoever wants to go, though, take it away.
Of course, yeah, I can get us started. So thanks so much, Hudah, for bringing us on today. My name is James. I founded Coinworth Capital. It's a family investment trust that invests in cryptocurrencies through the Harvard Innovation Labs back in 2022. And then this year, Dylan and I founded Quant.Fun, which is a retail-friendly, on-chain hedge fund platform that leverages Agentic AI to help users invest wisely. And so that's a lot to unpack. We've got a very tall tech stack, but the reason that we're doing all this work and learning all these different technologies, and boy is it a tall tech stack, is to help make your experience of making money on-chain safe and easy and comfortable. And so I didn't actually study computer science in undergrad. I concentrated in economics, but then I did my master's here in computer science. And so that was a really interesting, big change for me personally. And I'm a Christian and very devout. And so that's a little bit about me. How about you, Dylan?
Yeah, so I actually started my career in aerospace. I spent 6 years at an aerospace kind of deep tech startup doing a very niche high pressure turbine blade manufacturing technology. Had an exit there last year and was always interested in trading and traded kind of on the side, but went full-time trading in DeFi. A lot of meme coin related stuff, but eventually moved away from that and into more of this vaults technology where James and I started working together. And I really see an opportunity or a gap that hasn't been met in bringing DeFi yields to everyday consumers. And so I'm really interested in kind of bridging this trust gap and helping explain to users through our agents and other user experience pieces how to access these superior returns really relative to traditional finance.
I need it, boys. That's exactly what I need. And I think you're right. I don't think this something like this exists for the masses yet. It doesn't, like this kind of easy access, what you'll explain here in a bit, but this easy access to a different kind of investment. I think I've never had access to it before. And I feel like through things like this is going to be my first opportunity. Also, I've been saying this every time we have a guest on, because we seem to just get great guests. But you see, again, the kind of people that are here building in blockchain and in AI. It's like we got some next level talent here. Just your intros makes that pretty clear. So excited to get a little deeper here with you guys. I'm going to hit those headlines. Kat said it too. There's a huge headline out there. I think there's a few. Also, good morning to you guys, everybody who's here live, all the usual places. Abstract X, actually, I lied. Wasn't live on Abstract. Now I am. YouTube. And that's it for today. But live everywhere. Hit the like on the show. I do want to tell you guys, Kat's our good friend, our buddy here, our faithful hosting or joining as a co-host, a speaker on a big space is coming up here in, I think it's in an hour or an hour and a half, in just over an hour. Cass is going to be up there with the Whack AI guys, and Graham's going to be there, and there's somebody else too, right? It's a really awesome panel. and Katz belongs there, and I'm proud of him for working his way into that spot there. And again, he well deserving. Tune into that again coming up in just over an hour. It's the Spaces. Enjoy. I'm going to probably miss it, but I'll catch the replay. But GG's Katz. Shout out to Billy Betts, who yesterday made their migration over to Base complete from Solana to Base. They were also a Vader EAO launch with us. They're crushing it, man. They announced a $1 million funding round. I see names like Farouk investing, some Ijaz, right, from Bankless, like some really, really big names behind Billy Betts now. So, like, again, shout out to them, GGs. We'll get them back on the show. They're a friend of the show, but those guys are crushing it, man. I'm really proud of them. And then finally, I think this is our last one, but it's a really big one. We had a tease that there was a big update coming to the Virtual's Butler agent. And I think this is supposed to drop yesterday. Maybe it got pushed today, but here it is live now. If this was the announcement, the Butler agent is now live on X. You can tweet at him. For what, though? Well, it looks like Luna, like the OG Luna here, I think is turning into a meme coin launchpad. That's new. I think that's pretty darn big. In fact, like a quick look at the platform. So like launch meme coins. And now what you can do is through X and through the Butler, you can have it create you content for that meme coin. So like this is a full on, mind share blitz on X surrounded by meme coins. The Virtuals ecosystem keeps cooking. It's a special spot. So had to put that on your radar. Again, Butler interact on X. He now has some functionality there, which is really, really cool. Oh, I lied. There was one more story, and I'm an NFT bro, so I have to hit this one. We saw an AI agent by a CryptoPunk yesterday. We I love this. I mean, we saw last cycle, we'll call it, with Virtuals, AI XBT and his Quantum Cat buy and stuff like that. But this is the first time we've seen an AI agent autonomously. He did this on his own. Went and bought a CryptoPunk here, and it's a really nice one, and spent like almost 2x the floor. So that's what's coming here, guys. That's what's coming is agents getting degen with us. I can't wait. I can't. Was I not sharing my screen that whole time? Are you kidding? I told him before I didn't sleep last night, and I knew I was going to be a little off. Oh my God. It doesn't matter. You guys know what I'm talking about, but there's at least a punk. We'll at least get that in there. Clown Punk, 2x floor, lovely stuff. All right, let's get to Quant.Fun. Guys, where to start? I mean, I'll let you kind of drive this here, but if you could tell us what it is. And I do want to say again, congrats for the bonding. It's not easy in this market here, and I know it came right up to the wire. I'm glad it made it, and that's not, I think cutting it so close isn't even a comment on you and the project. That's just what the Genesis launches are like now. I've seen some good ones not make it, and then other good ones that just barely get there. I'm glad you did, and I can't wait to dive into this here. So yeah, take it away. What is Quant.Fun?
Yeah, well, first I want to comment. I think it's actually very funny that so many people are creating meme coin launchpads that even the AI agents now are becoming like meme coin launchpads. Like the AI slop fest that we're choosing to create for all this content is just so interesting.
Is it good or bad?
Well, I think that what we're going to have to do, if you've seen there's a movie, I think it's called Mountainhead, that talks about this concept of a filter that you can put on your AI. It's AI filter on your social media that will remove AI content or remove content that's just like fake. And so I think we're going to need that kind of thing. There was a scam project on Virtuals that claims to be that failed to launch last week. I think it was called TrueSight. But, but Quant.Fun has been a really interesting experience to create. But what we're trying to do is to bring together the current state of agentic intelligence with the current state of quant development. And a lot of the projects that claim to be like AI investing, they frankly are just high cost wrappers for USDC yield. I won't mention any names, but you might know a few of them that they claim that there's this something special going on, but actually it's kind of this incestuous thing where they're putting their own token into increasing their yield in the short term. You might know of a big name, starts with 4 letters, they have a green logo. And all they're offering is this like 6%. And I've seen other projects too that claim to be like AI fund managers, like artificial intelligence maximizing yield. And it's actually just fake. They're just switching between Morpho USDC vaults, and there are like 3 of them, which you could do with like the 20 lines of Python. And so I think that like what we're trying to do is actually have humans bring on the alpha, but the agent is actually more like a fund of funds manager deploying across this wide swath of different investment products. And so like if you click on like the view vaults page, you can actually go to see some of our products now. And we're hoping to have our like first version of our agent launched on Thursday. We wanted to launch something that's actually good and not just like the most generic thing possible. And so we chose to wait for quality there. But the idea is that right now we only offer 5 things, but as we bring on more hedge funds, more traders, and more strategies, just more alpha generally, then it becomes increasingly complex for Hudah, who, if he wants to invest a little bit of money in some of these things, to shop between them. And so the very first step of our agent is to help Hudah shop. Like, what's your risk tolerance? How long do you want to leave the money in there? Do you need it really fast? We typically have like a 2-hour withdrawal delay, which is below industry standard. They oftentimes make you wait a week. For our saving strategy, it's 0 withdrawal delay. We think that's really important. And so when you speak with Quant in that conversation, she'll be able to help you figure out which of our products is a right fit for you. And that'll become increasingly important as we list more and more and more products. I remember earlier this year going to the Hyperliquid Vaults page and having almost like a UX heart attack as someone who is a designer, just seeing the raw amount of vaults that you could not filter, you couldn't sort, and it was pretty rough. Dylan, did you have a point?
Oh, no. You're doing great, James.
Oh, okay. Well, thank you. But so there needs to be something, even on Drift, like the Drift main vaults page is super busy. And frankly, they only offer mostly the same thing, which is JLP vaults or some sort of very basic USDC yield. And so there's not actually a lot of competition in that market. There's actually not variety. And so they don't have to really have some sort of sorting or some sort of like agent to help you understand what's going on. But with us, we actually have different products. Like Bitcoin Fundamental is a really interesting product that is 90% of the time USDC yield, but 10% of the time it is in the market. And in backtesting, it has 100% win rate. And it's based on like my specific graduate work at Harvard, that I used to trade Bitcoin. And I didn't have any losing trades in 2018, 2019, 2020, or 2021. And I know that was a bull cycle, but I didn't take that many trades. But when you actually follow through on this very conservative strategy, you can have a very high win rate. And so that's what that one does. But Bitcoin Flagship 2 is designed to outperform Bitcoin with lower volatility. And so if you were to click on details for Bitcoin Flagship 2, and then we're really proud of that strategy. And
I was just going to ask it. It might be getting there if there's like some kind of demonstration or like if you can flex that record you had the last cycle.
You scroll down and then click view backtest results.
Wow. Oh, you got it.
And so you can see here if you scroll down a little bit more, the performance. I don't think we have the benchmark here for this one.
If you go back to the top, you can click on show Bitcoin price as the benchmark, and we can see those side by side.
Got it.
And so what you have here is a more stable strategy than Bitcoin with lower drawdowns, although it tends to go up at a more like flat line, right? And so if you scroll down, you can actually now see the comparison. So higher total return, higher Sharpe ratio, the max drawdown is like half, which is pretty amazing. And so when we create these strategies, we want to create things that are actually outperforming Bitcoin, because otherwise you would just buy Bitcoin. And so for a lot of our early customers, there are people that they want to make more money than just buying and holding passively crypto. Maybe it's Bitcoin or Solana, but they don't want to have to do all the work of like going into the meme coin trenches or learning about all these virtuals projects and trying to keep up with all the news on them. And so I think that what we built here is a way to bring the American hedge fund model forward by allowing easy access to everyone, the vaults allow for really amazing accounting solutions so that if I wanted to convert Quant Capital, my family trust fund, into a regular American hedge fund, I would have to pay many, many thousands of dollars a year for accountants to prove that I'm not committing fraud, because we don't have any good accounting systems. But with vaults, that's all automated. Like you can't commit fraud. You can't just say, oh, there's some money over here, I'm going to throw it in there and make it look like I won. It's like, no. Like vaults on the blockchain are entirely transparent in that way. And I think that's a really amazing thing for aligning incentives and just being transparent. Like that's one of the things that Dylan and I were really surprised by when we spoke with family offices, like rich individuals that are our mentors for the startup, guys that are maybe a little bit involved in crypto, but just involved in startups more generally. And they said, wow, I can actually see how my performance is doing live. Because for normal hedge funds, it's 3 months, maybe if you're really lucky, you get a monthly result from them. They also have like lockout periods, whereas like you can get your money really fast. And so there's just some really amazing fundamentals to the vaults technology that we're using at the bottom of our stack that make me believe that all hedge funds in the future will use vaults, if only for the accounting savings.
Could you explain what the vaults are? Because I know for some people here, and I'm going to put myself there, I'm really new to understanding them.
Yeah.
I don't, right? And so as basic as you can get.
Yeah. Why don't you go back to our main homepage? Yeah.
You want to see this or?
Yes, yep. Quant.Fun. Click on the top left corner, please. And then you're going to scroll down a bit, and we'll have a vaults section. Keep scrolling past that. Yeah, there we go.
There you go.
And then Dylan, would you like to walk through that?
Yeah, so vaults are kind of they've been around for a while. It's a smart contract technology, but they've really gotten use the beginning of this year with the administration change in the US, and they offer three main advantages over like a traditional investment product or a traditional hedge fund. And that's kind of what we're comparing against here. One is that they're non-custodial. So we as crypto natives kind of understand this concept, right? We control our keys, our crypto, but this is not standard for general finance products, right? You send your money to some custodian and then they hold it, and there's all sorts of guardrails in place to stop that money from getting stolen. But there are cases where there are leaks or bank runs or things like that. We saw that with SVB, right? They're custodying a bunch of people's money. And if it weren't for David Sachs tweeting very furiously, many startups probably would have lost all of their money. It wasn't backed by good assets. And so Vaults kind of solve some of those problems by inherently having the non-custodial nature. Transparent, if you want to click on that box on our website here.
In View Vaults, I'm sorry, transparent?
Yeah, transparent. So all, James mentioned this, right? Blockchain at its core is an accounting technology. And so since we're working on public ledgers, we're working on Solana, all of the transactions are public and happening in real time. And so we can see that, users can see that. There's no muddying of the data or of the trades. And then finally, they're permissionless. So anyone can access them. And this is, again, part of why the traditional hedge fund model is broken, and what we hope to improve on is anyone can access with, in our case, as little as $10, right? Traditionally, to get access to the highest performing hedge funds, if you think about like the Medallion Fund at Renaissance, you can't even get access unless you're an employee. And they've been traditionally the highest performing quant hedge fund. Jim Simons kind of started this whole quant revolution 30 odd years ago. You can't even get access to them, even if you have the most money. It's very much like high money, high connections, and we're kind of democratizing access through this vault technology because anyone can deposit and get exposure to these performance strategies. So yeah, that's kind of what vaults improve on, but happy to answer any questions or clarify points.
Well, that was great because when you explain it in like, blockchain lingo, like the terminology, we love the decentralized stuff, right? We love those core things. And this is kind of bringing that to a different type of investor is what it sounds like. And I'm all about that. And again, it's given somebody like me who gets the blockchain stuff exposure to a different kind of investment that I never really touched before, or strategies, I should say. How do we make money? How does that work? Like walk me through the process here. Where do the gains come from?
So are you asking about how we share the profits once we made them, or are you asking about the alpha itself?
Actually, that's a really good point. Let's start from alpha to then process from the alpha, the signal to then, the actual like making a trade. And then I don't know if this is like leverage. I don't know exactly where the wins are coming from. So as much detail, on the process.
Of course, yeah. So our Bitcoin flagship 2 and our entire swath of Bitcoin trading products are based on work that I did as a graduate student in 2021. I was able to sell the very top of the first peak of the Bitcoin bull run then, based on my model that said Bitcoin was overvalued. I'm really passionate about fundamentals investing, and that's always worked well for me so far. And so by choosing to apply a fundamentals framework to Bitcoin, it's been an amazing source of alpha for us. And then we look at ways in which we can use technical indicators that will help to describe, help us take action on that fundamentals data in a really effective way. And so here we don't have much of a track record on this one yet, but I think over time they really do demonstrate a lot of power. And then, so the back testing is just going to be more interesting if we only have under 2 weeks of data, because these things, sometimes it won't take trades for a while, that kind of jazz. So that's some of the alpha. How we place trades, we have we're using Drift vaults right now, but we do hope to build new vault infrastructure in the future, particularly because we want zero knowledge proof vaults to be able to help hedge funds to conceal their trades while preserving the other benefits of vaults. Because right now with all Drift vaults, all trades are public if somebody wants to look close enough. And then as far as the performance goes, so if in these high performance vaults like the Bitcoin Flagship 2, we charge a 0.30, which is pretty standard for like a Binance SMA account. But for our passive strategy, we charge a 1% management fee and a 0% performance fee. And that's below industry average. And so our costs, our fees share of the revenue is at for the high performance, and it's below for the passive strategies. And when we talk about strategies, I think that there are some really interesting things that we can offer that Robinhood can't offer. So Robinhood added staking recently, which I think is really great for on-chain, but they're not going to have leverage staking. And so leveraged liquid staking through using DSOL in our Sol staking 2x, you don't have to click into it. That's a really interesting product because you're earning 15 or 16% APY, and you have underlying exposure to Solana. And so, like, I had a pretty large 2x Sol long earlier this year that did pretty well in profit. But I wish I would have just done this instead, where instead of paying funding rates of the 13% a year or whatever it is, I'm actually getting paid funding rates of 16% per year. I also used to trade on the Chicago Mercantile Exchange before I moved on chain, and I would have to pay them such a large portion just for having my money in there. But it turns out that through some really interesting rehypothecation using these liquid staking tokens, you can actually get paid for holding that market risk instead of paying someone else to hold that market risk. And so our Sol staking 2x is a really interesting showcase of that type of innovation that we can do that I think a lot of the larger companies are just not able to do because there's like a higher risk to this thing. Like it's going to have a very high intraday volatility because Solana is a volatile asset.
Got it. And by the way, this is great. The one piece I was looking for is I wasn't sure if it was like these leverage positions, and it is. That's where you get those kind of returns from. So that makes a ton of sense. And then Dylan, I don't know if you were about to chime in with something.
Yeah. So I think at the core of your question is how do you make money? That's where we also think that we're trying to innovate more on the application layer user experience side. All you have to do to get exposure to these products is deposit into them. And then we manage actively all of the trades, all of the risk controls on the back end. And then coming out likely by the end of this week, we'll have a portfolio overview. So we aggregate all of the results across all of the investment products you see or you've invested in, and then you can see in one place how your portfolio is doing within our platform.
Very cool.
And so, yeah, that the innovation and like simplifying the process of how do we, in as few of actions as possible, get people into the platform, assuming that they want exposure to these products. I'll also say that the only leverage product we have right now is the Sol staking. So all of those other products, especially the directional products, is a really important point, is they are fully collateralized all the time with user funds. So there's no liquidation risk in either of the two Bitcoin active trading products that we're offering.
Oh, wow. Okay. All right. Well, that's kind of spicy then. Now, when somebody deposits to the vault, how are those trades being executed? Again, there's parts of this I don't understand because, again, this is new to me. It's foreign, and like that's why I'm excited. This is a new way for me to start, kind of getting into crypto too. Are you guys then executing trades, or is there something else going on where then a position is purchased, or is that what happens when I deposit? Am I buying shares of something? Like, how does this work?
Yeah, more or less how we're handling it on the back end is you are buying shares in the vault. How we have chosen to display it is in purely the dollar or the native asset terms. And so for the USDC deposit vaults, you'll only see how much you own in USDC terms, but on the back end, you do hold X number of shares in that product.
Very cool. And man, I'm going to get some of the questions in because we don't always get them. It's a good sign that we are. So let's start with Gravity here. An issue with needing to be an accredited investor.
Yeah, that's a great question. So we've talked to some really great lawyers, both that have like the American domestic experience and international experience about this. And because of the non-custodial nature of the vault's technology, because if Yehuda puts his money into a vault, I can't take it, and I never control it in that traditional sense. I only manage the trades on it. We are completely in the clear with accredited investors, and through some conversations with and listening to folks that are in the current administration, which I'm really thankful that I get to like have conversations with like politicians, particularly at conferences. That's where you get to talk to them. We're really good. We're good to innovate as much as we can over the next 4 years at least. Maybe if a Democrat gets elected in 4 years, it might be a little spunkier for us. But I do believe that the Democratic Party is also moving more toward innovation and like really supporting innovation in blockchain. My neighbor Elizabeth Warren here in Cambridge seems to be really against that, but I think that she's on the wrong side of history there. And so it seems like this type of new technology is in such a place where the old laws simply don't apply, because we have specific rights and privileges and protections for our investors that were impossible before blockchain existed. And so there will be new laws, and I hope that we have good regulations. That we just had the Stablecoin Act passed. That's really wonderful. Hopefully with the market structure bill and other regulations that help American blockchain companies to work honestly and to have regulatory clarity and not to be targeted by the SEC or whoever else in government. And so that's our current thought, but through our conversations with lawyers, it's all clear. Anybody can deposit, whether they're accredited or not.
Excellent here. Okay, we got another question. How do you measure portfolio risk on chain? Do you see or do you use any form of VAR? What is VAR, dude? Stress testing or convex risk measures? I love that there's smart people here right now. And how often are these metrics rebalanced?
Dylan?
Yeah, so we do selective to the complexity of the strategy. So the two strategies that we have right now, we fully understand what they're doing. And we do run some light stress tests on our back testing, but the two that we've published so far are really not that complex. We do have some ongoing research that are more actively using this fundamentals core model, and for those we are doing more stress testing and thinking about convexity and things like that. And we're also doing more dynamic rebalancing or dynamic back testing. And so we are thinking about these things. For the current products that we have, they are less important, and we're pretty confident that they'll be performant. As far as how we're thinking about displaying these metrics, again, for the products that we have right now, we think that I think we have like 6 cards for the strategy that we're showing in our backtest results. We think that those are in aggregate enough to kind of show you how we've thought about developing that strategy. But as we develop more complex strategies, our goal, again, going back to the AI agent, is to give the agent full context over what the strategy is doing so that we can help customers shop through these complex strategies. And so for that point, we will have more metrics available. It's a very, very long-winded answer, but I hope that I got to the core of the question there.
Yeah, and I want to add too, briefly, that we are not using leverage on our core Bitcoin trading products. And in backtesting, without leverage, the Bitcoin flagship 2 outperforms Bitcoin with lower volatility. And so if we wanted to add leverage, we could. And that's where we want to start thinking a lot more deeply about risk, because we're flying closer to the sun. But it's when you're just trading at the spot level, you are much safer. And I'm really thankful for the work Dylan has done to manage risk and be very attentive to that and to drawdowns and making sure we cut losses if something isn't going well. But I think we've got pretty good risk controls in our platform already.
Is Dylan the quant? Is that what I'm picking up?
Well, we're both technical, but Dylan has been doing more of the quant development.
I got you. Really cool. You mentioned it. Risks. What are the risks here?
Yeah. So it depends on what kind of detail you want for your answer. If you want like a full prospectus, like if you look at some Fidelity stock fund, they'll tell you all kinds of risk. There's market risk, right? There are counterparty risks. I think they're small because of the Drift. Drift is a very stable platform, and we're very happy to partner with them, and they've been super supportive of our engineering. And so I think the counterparty risks are pretty small. But the main risk, I guess, is just that a strategy doesn't work out, or maybe it performed really well for. I think this is a bigger thing. The big risk is like it performed really well for 6 months, and then it performs kind of bad for 2 months. You take your money out, but then it performs really well for another 6 months. And so I think that the biggest risk practically for our users is not being impatient or not trusting the process. And dumping when our strategies don't do well or when the market is generally down, only to buy back in when the market is high. And so that's I have a good friend from my time at JP Morgan, and he said that so much of his job is just convincing people to not dump sell when the market is panicking. And so I think that's the biggest risk for our users who want to make money. But as far as other risks involved with this, I'm happy to have a more detailed conversation about that. I have a lot of my money in this, like that TVL it's my money. And I'm probably going to put more and more in as we get more vaults, see more vaults, make sure that we demonstrate credibility there. But maybe Dylan has more comments on that.
Well, I think you said, I'll just hop in just real quick. I think you said you funded some of these vaults with from Coinworth Capital. So that's your previous hedge fund. And is it still current? I guess it is if you're investing.
I am still the general partner of Quantum Capital. That's
got
correct.
it. Yep.
Yeah.
Cool.
Yeah. Dylan, do you have any more comments on risk or?
Yeah, I mean, I think that to the point of buy high, sell low, we have that actively in mind. I think the way I like to think about markets is more from a psychological or like a poker perspective. And so the way that we're tuning our strategies is by thinking about max drawdown to try and reduce the likelihood of that emotional impact. And so for the flagship 2, we were very explicit in how we chose to parameterize that so that we could reduce max drawdown. And we still see a max drawdown of 40%, which is high. But if you compare that to Bitcoin, it's minus like almost 80% in comparison. And so trying to manage that psychological impact for the investor is another advantage of having these actively managed products.
Great. All right, I'm going to hit a couple questions, and then I want to get to the agent and the token. Is the token Quant? I think that's the ticker.
That's right. Yeah.
Cool. I like it. Smokey is asking, I'm actually going to try to answer this too, and then we'll let the experts answer it. Why wouldn't I just make my own pools and earn elsewhere? I can earn 94% on Meteora on a Sol USDC pool, 0.26% per 24 hours. Smokey, I'm just going to guess because like somebody like me has no idea how to do that, where to do that. And I think here it's just easier, more accessible, but I'm also like feeling confident about like the team that's helping manage it too. That's just my take, on it. But again, these guys, I'd love to hear that.
Yeah, so I think what Smokey is talking about is liquidity provision. And so liquidity provision can have these very high APYs in the short term, particularly when market activity is high. But those APYs tend to not last because they get competed away. So that's one aspect. And then if you also are more interested in the intellectual side of this, if you look at Siamak Molemi's work on loss versus rebalancing, you can watch some of those A16Z crypto lectures, plenty of math in those, about how by supplying LP, you are always dumb money. That's the basic idea. So if I set up a pool that's like Quant versus ETH to make it more convenient for people to buy Quant with ETH, if Quant goes up a whole lot, then I just have a lot of ETH. And so I just like have the worst end of the deal regardless. Or if Quant goes down, I just have Quant. And so liquidity provision is a really good strategy for some people that are really advanced and they can manage it, but it has incredibly high risks for people who are not very active.
Yeah. And I will say too, those kind of high yield opportunities will always exist in crypto. And we're not really targeting that market segment because there's an incredible amount of searching that you have to do to be able to find those. And they're so short-lived that it's just not accessible to everyday investors. Now, in the future, we may roll this kind of alpha search or alpha mining into a vault where we're kind of popping around different DeFi products and roll those up into a singular product. But again, our target is for onboarding people that haven't been able to get into crypto because of the complexity of these yields in a really simple format.
Did we lose him for a second, or was that just me?
I think it might have just been you. I heard Dylan the whole time.
Okay. All right. My bad.
Yeah. I think also there's an aspect of there are people in crypto that have already made their money and they just want to give it to somebody to do good yield farming for them. And frankly, I won't share who this was, but there's a guy that we know that he has a very large amount of money involved with. He sends it to someone's wallet and they manage it for him. So it's a very trusted environment. Whereas with a vault, that's better. And so crypto is still such a large, undeveloped space. And there are a lot of people that have money in like these stablecoin strategies, and maybe they'd be okay with putting that money into one of our products that is like higher risk reward. Well, there are some pools that can earn quite a bit. The largest pools are like Morpho USDC vaults, and they're earning 5 or 6%.
Okay, next from Gravity, have you guys, this project, have you had any discussion or notice from the SEC? And I would bet that depends on how like really new this is, because this year things are pretty different with the SEC and how they're dealing with these type of projects. But yeah, anything at all?
Yeah, let me be clear. So I was given the opportunity to speak with senators from both parties last year, and I'm super thankful for that. And other like politicians, I got to meet J. Christopher Giancarlo, one of like the biggest Republicans in crypto still, really good guy. And like I've got to speak with these different like government leaders about crypto, about what we're doing. And it seems like the tide has really turned, and that the SEC and Operation Choke Point 2.0 and all that is really behind us. And that the Democrats know how they're increasingly becoming aware of how many people like crypto and how it will be an election loser for them. And so we've not been targeted by the SEC. I don't think we're going to have any troubles with legality. We've had really strong legal counsel, like both national and international. So no concerns for me there.
Yeah, very cool. This gets us into some fun stuff, a little more of the degen side. Maybe it's all kind of degen. It's awesome. Okay, the agent itself. I'm curious where AI is in this project. I don't know if there's AI involved in these vaults or not. I don't know if the AI is the signals part of it and also the token, which we'll get into the token, kind of utility. But yeah, let's start with the AI agent. So you said launching here in like 2 days. What's the agent going to do?
Yeah, so at first, our goal for her is that she would explain our products and talk about risk tolerance with you. And so we've not launched it publicly yet. You can't access her right now. But the idea is that we've got some pretty complex products, and we're going to have more and more, and we want to bring on more hedge funds and more traders to make this a larger platform. And so it will simplify your process of choosing like, what do I want to put a little money into? You'll like have a little conversation with her over in this little chat box. You'll say, hey, like I want to make some money. This is how I want to do it. I have a high risk tolerance. I want to leave the money in there for at least 6 months. And she'll say, hey, Bitcoin Flagship 2 is probably pretty good for you. Maybe try like a 20% allocation and the Sol staking 2x. And so some of those conversations can be simplified, kind of like talking to a broker back in the day, getting his opinion. And so like at first she's helping you shop. But then later on, we want her to be more of an autonomous fund of funds manager, where through a single conversation with you, Hudah, she can actually learn what your preferences are and then invest in these strategies according to what you would want without you having to pay attention at all. And so she's going to help your number go up over time through dynamic allocation, and maybe some strategies that like a partner lists aren't a winner. She takes money out of those and putting it into strategies that are winners. And so that dynamic optimization is where you get into agentic intelligence, and where she reaches that level 3 or level 4 among the virtuals levels of intelligence in that ecosystem.
Yeah, very cool. I can tell I'd be friends with her. She's like, like kind of customer servicey, but then is going to help you actually make these trades exactly what I need here. So then the Quant token, yeah, like what is the Quant token used for? And I'm kind of curious if this Genesis launch did not get to 100%, would this project have continued on and the building still happens and build those relationships, or was the token required for this to kind of keep going forward?
Token was definitely not required. It's funny, actually. We first learned about the idea of launching a token to help you get early customers and interest from some friends who were founding DocuSol. It's like DocuSign on Solana. And what they did is they launched a pump fund token that they made no money on, but it got a lot of followers for them. It got a lot of interest. And so I think that like having this token allows us to connect deeply within a specific ecosystem in crypto. It helps us to get some early customers. It helps us to learn more about how we communicate about our product and become even more of like a proper crypto native company. And so I'm really thankful for that. And like, if we had failed for some reason, then I think we would have just launched again. I would say also that I got to, the reason that we launched this token is because we got to meet Chris, one of the co-founders of Virtuals in New York City at Solana Accelerate a few months ago. And it's through like the conversation with him and then Burry, the head of like North America for Virtuals, that we were actually connected in. And so while the market was pretty tough on the day we launched, we had like all the right connections to get this started. And so I think that, let me talk about token price for a little bit. The people that wanted the quick return have already left. And so I think that something's going to be really interesting for our token price is our monthly buyback and burn events. And so what we're going to do, this chart is so strange because sometimes it shows double that, like with the FDV, sometimes it just shows like the non-FDV, but the market cap looks like it's like around 460 right now. But we were at a peak of like 1.3 million right after launch. And so around these monthly token burn events, that demonstrates that we're serious. We're going to talk about our updates for our product at that point, but also it demonstrates that we're actually giving money back to the people that believed in us through these buybacks of the token. And so I think that having that really clear auditable process and that value transfer back to our token holders is super unique in the Virtuals ecosystem and in crypto generally. And we're not just saying, oh, we might give some money back to people. It's like, no, like we are serious about sharing value and rewarding those who believed in us.
That makes sense. And then, so you do have team tokens. Is there a plan for those? Is that part of giving back? Like on top of burning, is there a plan to do like staking rewards, yapping campaigns so people can earn, or are you going to use some of those tokens to help fund things? Which, by the way, like I am always good with that. I think projects should. I mean, the token is there for, I think, both sides to benefit.
Yeah, well, I would say that I am thankful that my financial situation is such that I can not have to worry about selling our tokens in order to like eat, right? I think that's trouble for a number of like crypto projects, but that's not a problem for us. My goal with our token allocations, including my own team allocation, is to use those to maximally promote our protocol and to get as much TVL into our strategies, to get a lot of partners in our strategies, and to build up Quant into a bigger, more powerful, more robust ecosystem. And then that value gets to return to our token holders through the increased buybacks, right? And so I want to be clear too that to use our product to talk to Quant, when you have a conversation with her, it doesn't cost you tokens. We've entirely separated the token from the actual product because we want our product to be really easy to use for non-crypto natives. And we want our token to be a very as simple as possible of a product. It's not like some sort of game. It's actually just something that you would buy. It's not a security, but you might hope for price appreciation.
Right. This is, I mean, I hope people understand what's happening here on Virtuals is very much what the Solana chain is running with as a narrative, internet capital markets. That's happening here. We're seeing a lot of that here on Virtuals, and we're not calling it that. We're just calling it AI agents, and it's not that. This is us. This is, real businesses and projects getting a chance to launch a token and use that token for whatever, funding, this, that, whatever. But that is exactly what's happening here, and I think it's special that it's happening here. There's a couple comments in the chat. I can actually take these too, because I live and breathe this stuff as well. Comments about like volume, market cap, trading action. Again, these couple comments, I think they're always fine to ask, but just experience. You guys may have been around Virtuals for a while. This token, when I see how high it gets and where it's at now and the type of volume it might have gotten day one and what it has now, that is every single token that launches. You know what I mean? I don't know if a team can even comment on that other than what I'm saying here. It's just that is what happens when you launch a token and the snipers get in and they buy up your token, and there is manipulation that happens outside, right? There's other guys playing a game. There's so many games here. And so like to me, I look at that looks organic, natural, like as can be. It looks like every other token here as far as people are going to game it.
I have a brief comment. So we were dramatically oversubscribed. I think we were at like 250%. And a lot of our people that we wanted to buy the token couldn't because we were outbid by points. And so I put in the maximum amount of Virtuals, but then I ended up getting an allocation from the Genesis launch of under $1. And the same happened to a number of my friends because we were just outbid on the points by these whales that wanted to have that pump and then dump kind of chart pattern. And so I do think that, you're going to have a lot of volatility in the first few days, but I do believe that over time, as we gain more and more people that actually see that we're a real startup, that we're going to grow in token price as well. I should also say that what we're doing has been faked a lot, and it's really sad that that's true, but there have been so many really sad projects where it's just like entirely a scam, but this is a real thing, and so that's one of the reasons why we chose to be doxxed, is to show that this is a real product, and we're not some random like cyber lords trying to steal your money from the ether. It's like, and so that's a few of my points.
Well, I love that. By the way, as much as you can lean into that, do it, because we say that a lot on this show. I mean, again, the people that come on the show, you see the separation. There's a lot of like anonymous people out there building something that might sound awesome. You'll never see it. You'll never see the product, right? I don't know what percentage of them are actually that. It's a high percentage of the projects that launch wherever, virtuals too. You're never going to see them, or they can't deliver what they said. And so I love seeing like this, where I just conversation here. I believe we're going to see this play out. So that sets it apart. And yeah, Dylan, if you had something there.
Yeah, I was just going to say, I think pump and dump is an interesting phrase. So the team has, by nature of the smart contract, all of our tokens are locked for the next 90 days before we even get allocation to distribute early team, as well as for airdrops and early marketing initiatives. And so we're not the ones pumping or dumping. This is just natural market action. So I do want to clarify that the team and like our close friends have only bought the token.
Yep. No, I'm glad you said it again. Seeing that that's not the team. That is literally traders and speculators. And again, every token that launches, you will see that. So
I will also say that I've had a few people tell me that in crypto, projects are 98% marketing and 2% product. And I think that because we want to be honest and build something that has sustainable value, we've kind of flipped that. Right. And so we have people asking, okay, can you give us a daily update? It's like, we're doing hard engineering work, right? Like we're building a real product. And so we do some marketing, but we're not going to have daily updates, because that's just not realistic for building the type of technology and business that we want to.
The more projects that can stick to that, because that's kind of our MO as well. Like, right, we've got our agent out there. People want updates every day. Look, we give them when we have them, because same thing. It's a team of people behind the scenes building. And the more projects that come in and do that, the more we normalize that. And that really needs to be normalized. Like, there's a place for the constant updates, hypey stuff on X. There's a place for that. That's like meme coins. And, if you can bring an element of it to the real stuff, fun, good. That's like icing on top. But it should not be expected with like real products are coming out, and they have potential that lasts cycles. It goes beyond the cycles. So it's what we're hoping to grow this all into, at least. A couple more questions here, and then I have I think a good ending question in mind. Why not? Well, we'll go here. Is there any benefits for staking? If you're going to offer staking, I guess Virtuals does, but.
Yeah, so any benefits of staking our token on virtuals, or our staking products that we offer?
I think staking on virtuals as opposed to staking in a vault, right?
Yeah. It's the general staking contract. We don't offer any special incentives.
Got it. So better off, well, maybe better off staking in a vault and trying to grow that way. There you go. Why not make Quant available on Solana? That's interesting. As we saw, like Billy Betts go from Solana to Base, and he's not the first project to go from Solana to Base. There's something special on Base, but what's your reasoning for not being on Solana?
Well, we actually are on, so our token is on Base because of virtual limitations, but all of our infrastructure is on Solana.
Okay.
Yeah.
There we go.
There may be a point in the future where we build a bridge and have liquidity on both chains, but for now the token is on Base because James mentioned the virtuals limitation, and yeah, again, all of our tech Solana.
Yeah, I guess you can't do a Genesis launch on Solana, right? You can do like one-off launches, but not a Genesis launch, which I thought they were going to actually implement Genesis launches on Solana, but they didn't. And again, you see these projects coming over. We have got AIXBT is on. God, okay. Now on Base, on ETH, I don't remember if he's like got Wormhole set up where he's on Solana too. Maybe not.
Probably not. It's like not a trivial engineering thing.
Yeah. No, you're right. Maybe it was just Billy Base and maybe one or two others. But yeah, no, it's interesting, and I do like the culture being built on Base. I like the building happening here. Base is starting to finally grow that culture, which is great. Do you have a public API? CB is asking.
A public API for you to be able to deposit and withdraw? Is that the idea?
Yeah, I'm wondering.
I'm not sure what that means.
Yeah, because I wonder what I'd be wanting to tap into. Maybe your strat. I don't even know. Yeah. Well, we'll see if he
I,
comes
I
back a
think
little
so.
more.
So the answer is eventually, yes, we will have a public API via ACP. And if we choose to also list our agent on Nando or MCP, other discoverability and addressing platforms, where people can still send money and send transactions in through the agent that will then put it into the vault for us.
I see.
So that's the long-term vision. It's not like just like a back-end API. It is agentic.
Got it. That makes sense then. Okay. Okay. So for the quant token for the holders to see a benefit, you're going to need users coming to this platform and getting in these vaults and hopefully making a lot of money. And what's your goals or what's your plans to grow this? Because it's interesting. You're looking for people, I think like me and DGens too, but you're looking for some big money that's out there in like this other part, like these other kind of investors. What's the goal or how do you get them? Are they interested in doing this kind of crypto investment too? Like, what's their reaction to it?
Yeah, so I think for a lot of them, it's about having a really high quality product. And so I know that some of my family members have absurd amounts of money earning 4.25% in banks in the middle of America. And it's really dumb. And I'm going to talk to them about putting their money into our savings vault, which earns like 6% on average, something like that. So they're making more money. It's a no-brainer. The process of using it is a little bit different, but the actual access to the money is faster than having to use one of those savings accounts, which has like a lockout period and very specific limitations on withdrawals. And so we have a superior high yield savings account versus traditional finance. If you look at our Bitcoin strategies, over time, we're going to have more and more of a track record to show. I think that they're going to be really profitable. And those are going to be substantially more attractive for people than having to have the stress of buying and holding something like Tesla, right? Like a very volatile stock. But they can just buy this strategy that has those types of returns, but there's someone smart managing it for you, so you don't have to bear that existential experience of having so much of your money in these volatile assets. Like you're able to collaborate with us, and then we can share the profits. And I think that's something that is going to be really powerful.
One thing I want to mention, somewhat related, is I don't know if you saw on our tokenomics page, but we do also have an airdrop allocation in our unlocks. And so we do want to reward early platform users. And so we haven't published how we're going to allocate, but for people that are using our platform, there will be a way to get an airdrop from the Quant token. And that will happen and be distributed on January 1st. Of next year. And our hope is that we can use that, those early customers to incentivize them to, one, use the platform and reward them for that, but two, to have them be core users of our product and give us critical feedback so that we can really innovate on the user experience side, which is a big component of our success. And that's mutual success.
Yeah, and then finally, we're talking to people that we've met in real life, family offices, that kind of thing, looking for checks of between 50K to 150K. Our track records are still not quite long enough for us to want to really recruit hard on that, but that's going to be something that's important for us in late Q3 and Q4 this year.
Yeah, do you have any goals, like any specific investment goals for this year, as far as kind of money you're looking to bring in?
Yeah, I think that's a good question. Once we get started with that process, I think we'll have more metrics for us, but I could give you a number today. I think that for us to be really credible, you're looking at around $5 million in TVL before retail will really start to trust you. And so I think that's a pretty good goal for us within the next year. I think that's very, very doable. I think this year that's also doable. It just depends on how much time we're spending on engineering versus business development, and what kind of hires we're making too, because like we're hiring engineers is a trade-off versus hiring somebody for BD. And these decisions are something that we're still figuring out, but I don't think that reaching that 5 million like trustworthy mark is something that's very far away from us.
Yeah, very cool. Looking to grow the team too, by the way?
Oh yeah, we're gonna definitely need to hire some engineers. We've got some good friends like from MIT and Amazon that we're hoping to bring on. Thankfully, living in Harvard Square, we have so many talented people. A lot of the tech giants are here, and so probably going to be recruiting people from outside of crypto that are really talented software engineers, and then also people from outside of crypto as well for the BD side. Just because our product is more targeted toward people that are like more crypto casual.
Maybe my final point here is I think it's interesting. I like this just popped in my head. It's really interesting. I think the new regulatory clarity we're getting is getting people who are not in crypto maybe more interested in building in crypto. Are you starting to pick that up a little bit?
Yeah, well, I think that you have different tides happening, right? If we're in this giant pool, one of the big things is that yes, the regulatory environment has improved. Building in crypto has become safer, which is really wonderful. It's like become very safe. As long as you're not committing fraud, you're basically good. I love that policy decision that they've made. But also, you have this weird counter effect of AI sucking talent out of crypto. And so, like in the virtuals ecosystem, we're kind of in both, and so we can have some talented people. But if you look at the total aggregate number of the blockchain engineers, it's actually fallen pretty dramatically in the last 2 years because so many engineers I've spoken to in person have chosen to leave crypto for AI because there's more money and it's more corporate and it's more professional, and so they like some of those things. And so crypto is actually kind of we're building right now, which is really good. But we actually don't have as much talent as we used to have a few years ago.
Yeah, that's interesting. Well, then the best spot to be is crypto and AI together. So,
yes, I think so.
Good stuff. Good stuff. Any final words? Anything you want to make sure that the people know about before we get out of here?
Yeah, I just want to thank you guys. Some of you might be token holders already for believing in us and believing in our project. I think that as we continue to share the value that we're generating, and this becomes more and more material, that and specifically around those like buyback events, that we're going to see more and more credibility, and I'm really thankful for that. And so please try out our products if you haven't already, or at least pay attention and come back a little later if you want the track records to be longer. But if you have any ideas that are not just like generic Telegram marketing, you can also share those with us. We have a chat. You can follow us at MyQuant.Fun. You can message me if you like at QuantFun CEO. You can message Dylan if you like at
Dylan Loomis.
Dylan Loomis.
Yeah.
I should have those up on the screen, but really, really good stuff. Hang on, let me get the share up here.
Yeah, and I'm super thankful that you brought us on the show. This was really awesome.
Oh yeah, and here's the thing: if you've been on the show, then you're always welcome back on the show. Like it's an open door, always. If you want to, like, I mean, who can do an hour? You know, often. I mean, come in for 5 minutes, give an update when you have a big thing coming on. Let's pop in, let people know what you're working on, and then boogie or hang out. It's your call. But you guys are fantastic. I'm really, really glad we connected and you were able to make it here. So good stuff, guys. Yeah, there you are. My QuantFun, that's over on X. Give it a follow. I'm telling you guys, yeah, it's really interesting. It's different. It's different. This is something we'll have to go deeper on next time. But hearing about some of these other projects that are out there that maybe aren't delivering what people think, or what, there's a little spice there, a little smoke there, you know, so to say. So we'll get into that too, maybe next time. Again, follow them there, guys. You can follow us. Well, I'll just say go over to YouTube and subscribe. It's CryptoSlam over on YouTube. We keep getting these just awesome people on the show who are building really, really awesome stuff, and it's worth your time to go and catch these replays and make sure you know who is building the cool stuff here in virtual. So subscribe over there, and then tomorrow we're gonna have Ring Fence on the show, so we'll get into their project, which is all very, very different. Again, a really unique product that's here in the virtuals ecosystem. So we'll have them on the show. Legend coming up Thursday. A lot more coming, guys. So thank you again for tuning in. Thank you to you two for joining. Wishing you the success here, man. Go get them.
Thank you so much. Yeah. See you guys.
Awesome. See you guys. Take care. Bye.
Bye.